Hello traders, welcome back to the Forex Gig where we dive deep into the tool that can help you make smarter trading decisions. And in today's video, we are going to be talking about the ICT Asian Killzone, a powerful concept that can significantly enhance your trading strategy. This specific time window in the forex market offers unique opportunities for traders who knows how to leverage on it effectively. So by understanding the dynamics of the Asian kill zone, you can potentially improve your entry points, manage risk more effectively, and increase your overall trading success. So stay tuned until the end of this video to learn how to implement this strategy in your trading routine and gain a competitive edge in the market. So what are the ICT Asian kill zones? Now, is a specific time window in the forex market that occurs during the opening of Asian trading section, particularly the Tokyo market. This is a typical period between 7 p.m. to 10 p.m. to 11 p.m. in the market. So from 7 p.m., this is 7 p.m. to 11 p.m. in the market. This is basically our Asian section. Now it is a critical window for traders who want to identify potential setup and market behavior at the start of the day. Now let's see how and what we'll be looking for to master this ICT Asian kill zone. First of all, you have to prepare your charts, and by preparing your charts, you will set your chart to an appropriate time frame, typically the 5 minutes time frame or your 1 minute time frame. For a chart currency pair that involves either your Australian dollar or your New Zealand or your Japanese yen, so I'll be making use of the USD Japanese yen for this trading strategy. We have to also set our time frame to New York section so that we'll be able to time our Asian kill zone, and this occurs between 7 p.m. to 11 p.m. in the market. So 11 p.m. in the market during that time. Now the next step is to identify your short-term liquidity. First of all, you analyze the price action during the previous New York section. And as you can see, if we are analyzing this chart, this is a particular area, we can see that price gave us a clear uptrend, signaling that we are in an uptrend. It created a high and retraced back and broke that high. So at this area, this was our previous New York section. Now Asian section will start by exactly 7 p.m. So by 7 p.m., this is when our Asian section will start, and I can see that there is a lot of liquidity being created here during our New York section, our previous New York section. So the moment our Asian section opens, we look for a typical swing low or swing high, in this case a swing low that potentially takes out liquidity. And as you can see, this swing low swept the liquidity in this area. And remember, the general trend analyzing from the previous market structure signifies that we are in an uptrend. So the moment we see a sweep of the liquidity, sweep of the previous price action, this is what we'll be looking for, which is the third step. We wait for the liquidity sweep as it occurs during the Asian kill zone. This is when it begins. We wait for price movements that will sweep and identify liquidity levels. The sweep occurs during the first hour of the kill zone, exactly around 8 p.m. So around 8 p.m., this is when you'll be expecting the sweep, and as we can see at this area, this particular price action swept liquidity. Now we'll be looking for our reversal signals because we have already known our trend is to the upside. This sweep was more like a confirmation to get why price was retracing to the downside in this uptrend. So our reversal signals can be price action such as an engulfing bullish candle. We can also use pin bars or a hammer candlestick pattern. We can also look at a short-term break of trend line as a signal. A short-term break of trend line. This can be a trend line that will wait for price to break above. This can be our signal, or we can use a candlestick pattern like this hammer, or we can use an engulfing pattern. Then we can also use the formation of higher lows in terms of a potential bullish market condition. Bullish reversal will look for higher lows, and as you can see, this is a higher low. We can also see a bearish confirmation, but in terms of a bearish reversal, we'll look for lower highs. So this is a typical example of a kill zone. Now we enter the trade once we have spotted our reversal signals. So this can be a good reversal signal. This bullish engulfing is a good reversal signal. We can enter at this area. We'll put our take profit 20 pips from our entries. Just use a 20 pips take profit from our entry. You place your stop loss just below the swing point, and this will give us a 1:1 risk to reward ratio trade. So this is how you can trade using the Asian kill zones, giving your trade room to breathe. That's why we place our stop loss just below the low while maintaining a favorable risk to reward. Now let's see if we can get another trading opportunity. And I can see from this area the starting of our Asian section is from 7 p.m. 7 p.m. at this area. This is our Asian section, and the previous New York section showed that price was in a bullish trend, making series of higher highs, higher lows, higher highs, higher lows, higher highs. This is the higher high, potentially a higher low. This is basically what the previous New York section was telling us before we started our Asian section at this area. Now looking for areas for possible Asian sweep zones or kill zones. I can see this as a previous support area where price is retesting, finding it difficult to break this area. This is also a strong resistance point that got broken at this area and became a support point. So these are the areas we'll be looking at. We'll wait for our Asian liquidity sweep, and as we can see, since this was a support region, price came to sweep the previous support region at this area. After we have spotted our sweep of support, we'll look for our bearish confirmation for the continuation on the trend direction, and we can see our bullish engulfing pattern that engulfed back after it swept the liquidity. This is a good confirmation entry, and this is where we would want to enter our trade, putting our stop loss just below that swing low point, and we aim for a minimum of 1:2 or 1:1 risk to reward ratio. This is basically how we can trade using our ICT Asian kill zone. Not only that, we have to monitor and manage our trade. While the strategy aims for a quick 20 pips, it is essential to monitor your trading progress. If the market shows a strong momentum in your favor, consider trailing your stop loss. You can trail your stop loss if you believe the price will keep on going higher. If not, you can lock in some profits and leave the trade. Always remember to record and analyze each trade. You will have to record in your trading journal so that you can always go back to refer back to how you made or how you took the trade. Basically journaling your trade, whether they are winners or losses. Record the details in your trading journal. This practice will help you to refine your trading strategy over time and identify any pattern or areas you need improvement in. Alright traders, we have come to the end of this video. Engage with us in the comments below. We want to hear about your experiences. And if you found this video helpful, do not forget to like, subscribe and turn on the notification bell so that you would never miss out on more trading tips and strategies. Thank you for watching and I will see you in the next video.